Good afternoon, everyone. I'll just give another 30 seconds for some latecomers. Anthony, how you going?
I'm well, thanks, Adrian. How are you?
Very good, thank you.
Um,
Just wait just a little bit for a few
Nice.
to log on in. We'll get started in about 30 seconds or so.
Great. I can see. I think I can see Brian Callahan's name there, which is great to have him.
Hello, Anthony.
Hi, Brian. How you going? Great to see you.
Fine,
Well, hear
fine.
you.
Yeah, exactly. I'm incognito tonight.
No, that's good.
All right. With that, I might get started as people the last few people start to log on and join. I'd like to begin by acknowledging the traditional owners and custodians of the land on which we meet today, the peoples of the Kulin Nation. I also pay respects to their elders, past and present. So welcome, everybody. A number of you I know have been in the last few webinars, the last couple of webinars, I should say, that we've run over the last couple of months. And for those newcomers who this is the first capital raising webinar you've joined, just to give you the background, this is the third and final webinar of the three-part series, which we've hosted over the last month. And so with that, today we have a panel session with Anthony Curtin, who I'll introduce in a minute, moderating the session, and three of us panelists. So firstly, if I could thank Anthony for assisting me in putting together this webinar series overall, and also for moderating this session. And I'd also like to welcome Scott Hayes, founder and CEO of First Contact Advisory, based in the US, and former CTO of Mendoza Ventures, and also Sam Davey, founder and CEO of Park. So Sam, I don't see you on the screen, so if you could jump on video, that'd be good.
He's just having a little bit of trouble logging on to Teams, but I'm sure we can kick off regardless.
We'll get started without him. He can join when he can. So for today's session, essentially, I'll hand over to Anthony to introduce Scott and get a bit more background. But as you know, the session today is essentially covering the topic of realities of expanding to the US and raising money. So on the back of the previous two webinars, the first one being understanding the different types of funding for companies to understand and work through in terms of looking at their capital raising requirements, and then the second one in preparing to raise. So obviously everything that's needed to seek raising money and be successful at it. And this one is to really talk about the realities of the US. And before I hand over, just to understand that idea of the US being a completely different and challenging beast in and of itself. And so if we have some expertise on the call today just to talk through that and understand where the current market sits, what the landscape looks like, and the realities of it that companies really do need to know before they make that jump into expanding over there and tackling the idea of raising capital. Fergal, I think it is, if you don't mind just popping off your camera until at least we get to the question and answers, and if everyone else can also keep their cameras off and mics if possible. And with that, I'll hand over to you, Anthony, for a brief intro and also just a bit of background on the bit further on the panelists that we've got in today.
Yeah, no worries. Thanks so much, Adrian. Really appreciate that. So I was and really appreciate the opportunity today. As Adrian mentioned, my name's Anthony Curtin. I'm the managing partner at Merton Lawyers. I'll be moderating, just so you guys all have a bit of context. Our focus is really advising founders and investors of emerging growth companies through the whole life cycle, our purpose is really to be a catalyst of growth for the ecosystem, and we do that through a number of ways, obviously today, but working with groups like Global Victoria, but also through our Project Frontier service, which is being designed, and we had such great intel from Global Victoria about landing Australians more successful in the US. So that's a bit of context about how I've come here. And yeah, look, if there's any questions through the session, just please put them into the chat. More than happy to answer them as we go. We'll kind of be looking through them to see what's appropriate or bunch them up. And look, this will be a really great session. Obviously, Adrian's given me a very good intro, but I'd also just like to acknowledge Adrian's work. He is a trade director with Global Vic. A number of our clients work with him directly in expanding to the US. A great safe set of hands, very commercial, and I think that is just a theme that goes throughout the group at Global Vic. I know we've got Brian there in San Francisco at the moment, and it is very comforting when you land there that you've got Victoria on the ground. So please utilise that as best you can if you are considering. I know Adrian and Brian, you can just reach out to them directly. We also, we've got Scott Hayes as well, who's from First Contact Advisory in Boston. Appreciate you taking the time, Scott. He was previously the CFO of Mendoza. He's an LP as well into other VCs and an angel investor. So we're really fortunate to have Scott here. We've also got a good friend, Sam Davey, who I believe is doing his best to get on, but he's a great person to have on this panel because he's the founder of Park Social. He was previously the global head of brand at Apple in Palo Alto. He also led Crumpler from that kind of corner store to a national product. He's got some incredible insights into operating in the US. But also just the day-to-day challenges of trying to raise capital and balancing that act. So I just thought I'd also, Scott, great to have you on board.
No, thanks, Anthony and Adrian. It's a pleasure to be here, and just delighted to have the opportunity to have a chat. I'm a proud Victorian, so I like to see Victorian companies excel, and especially overseas in America. But just a little bit about me. So my name's Scott Hayes. I'm First Contact Advisory. I'm based in Boston. I'm an advisor and investor into startups and Australian companies. As I said, I like to see Australians do well. And the differentiator for me is I'm on the ground here. It's boots on the ground. I'm here to help. I've got market knowledge and connections. Previously, I was CFO at Mendoza Ventures for 3 years. I helped execute and set up and invest and fundraise for 3 funds. I set up 6 SPVs for co-investments, which raised $4 million for those portfolio companies. So I'm well versed in the investment landscape and how it pertains over here. I've had a number of discussions with VCs in the last couple of weeks, and the market's definitely changed. So as we progress, I'll talk more about that as well.
Awesome. Thanks, Scott. And we've got Sam. Sam, you've done well. I just sent you a question mark message and you delivered. I know that logo from a mile away. So Sam, I've done a quick intro, but do you want to just give a bit of insight into yourself?
Yeah, sure. Hi, everyone. I'm Sam Davey. I am the co-founder of Park. We're a social and environmental impact sportswear brand. Previously to that, I was global creative director at Apple in Cupertino for a long time. And I also used to run a bag and luggage brand, Australian brand called Crumpler, that was based here. And we used to do a lot of operations overseas, including in the US. So I'm quite used to, working in the American environment, both as an employee and, being in the country, and also, as running a business that's operating in that region. And now as a co-founder, my other co-founder is based in New York. So we started this business Trans-Pacific, shall we say, from the beginning. which has some interesting challenges and some opportunities that come with it that I guess feed into my experience. So yeah, I've kind of got a lot of different lenses, I guess, that I can maybe bring to this conversation.
Excellent. And there's a fair bit of white hair too. Well, I don't even have that much hair, so I can't really comment. But so there's a bit of experience here, I can tell. So look, guys, let's kick it off. I think the one thing that always pops up for me is just the reasoning around expanding to the US. Scott, from your perspective, like and Sam, why should Australian companies be looking to expand to the US? And secondly, why would they be looking at that raising money? I think it sounds like a simple question, but I think there's a few layers there.
Look, really, if it's technology or anything like that, Australia's just too small a market. There's as an investor, there's two things, right? Is it a like a cottage business where you can do well and just look for yourself, or do you really want to globally expand and there's a solution there that's a global problem, and so most tech companies have a view of going to America because that is a bigger market. You've got products there that are product market fit. You've got talent there that wants to work with innovative companies. And then on the back of that, because it's a more mature sort of industry, you've got more capital that understands these startups and early stage businesses and how they operate. So whereas Australia's a little bit more mature, it's still got that old bricks and mortar mentality. It's not as sophisticated. It has developed a lot in the last 5 years per se, but it's still sort of nascent. So if you've got a good idea, good business, and it's technology based, there's no better place in the US.
Yep. Sam, what's been your experience?
I think similar to Scott in that, if you've got a business that you think that there's a global audience for, whatever that might be, whether that's technology or in our case, physical products, there's no real reason why you wouldn't try and expand to the US. In my opinion, the market there is huge. From an Australian perspective, it's mainly in English speaking. So there are, there's a lot of crossover there. You're not going into a country where you've got to, localize everything from a language perspective. It is a foreign country, so you can't just treat it as an extension of Australia, which I think is a mistake that many make. But I think that, I think if you've got something that you think is working, then I think that as a business owner, I think one of the most, your most important assets is the time that you have, right? So like, where do you focus your efforts? There's only a certain amount of time in a day, and it takes the same amount of time to try and solve small problems or small opportunities as it does to do big ones. So I think that, like, if you've got something working and you think that there's mechanisms there that can scale, then why wouldn't you, I guess, is the question.
No, absolutely. And Adrian, one of the things we were talking about, you and I always talk about is, obviously that timing piece, but you've seen a number of companies and from Victoria heading over to the US. What stage of company development or capital raise level should the company, at what stage should they be at? Because the one thing I'm seeing as well, we've got some consumer products that are very well advanced. They're ready to go. They can fit in off they go. But then you've got some really still potentially early stage companies that, arguably they may not be ready to go, but it's one of those things that it's just what they have to do.
Yeah. Thanks for the question, Anth. It's an interesting one, and I exclusively won't answer that in context of capital raising, because I'll leave that to Scott and Sam to give their advice and expertise on. But just in terms of the expansion question specifically, it's really about readiness, and that can mean different things to different companies. It's not the size of the company necessarily. It's the readiness for that market, both from a mental perspective of the owner or the person in charge of scaling it in the market, as well as the company's maturity to undertake it. And Sam mentioned it in terms of it's a tough market, and it is a foreign market, so it's not just an extension of Australia. And so with that comes the commitment to the market, knowing that it dwarfs Australia. So when you think, oh, I'll just expand and take the time and try the US market, it has to come a real drive from the owner to say, listen, we want to commit to that market and have money behind you, whether you need to raise it to get it or you've got it. It's not just a dabble market. That's probably what it is. So if companies are at a stage where they say, we understand that, and we're committed to, we're willing to do the hard work, spend time, money, energy, resource to get there and be successful. If they have that attitude, I would say that goes a long way to being ready and understanding their product, their fit, and their own industry in America is really important, because it's so competitive. And so without that knowledge, you're not ready. As harsh as that might sound, it's on the back of wanting a company to be successful.
Yeah, no, that's great. And I'm going to tell you what questions I'm going to ask first. So, because I might forget it. Sam, how did you know that you're ready? And then Scott, how do you measure it once they've landed and they're pitching to you as a US investor?
I think, how do we know that we were ready? Well, I mean, from our perspective, we were in a way maybe foolish enough that we kind of went there right at the beginning. So we were kind of sort of ready from the get-go. And I think our perspective on that was, my co-founder is based there. She is American. We've worked together a lot in the past. So we were sort of coming at this with a fair amount of latent knowledge of the market. We'd opened retail stores there. We'd been running a business over there. So we had a good idea of sort of how that operates. And that sort of is what sort of drove our desire to kind of be there right from the beginning. We felt that, we are a sports company. We predominantly focus on soccer or football. And so we felt that, it's a global game. It's a global language. We can kind of, we can use that as a way to kind of step into that market from the beginning. But I think that, you start to get some, I think, we spent a long time in those early stages of the business, having a lot of conversations with, potential customers, different types of organizations in the market to really get a gauge of, where we write in that assessment at the beginning. Was this somewhere where we wanted to, as you say, Anthony, sort of double down on, we actually kind of, committing to. And we felt that the time was right for us and for our business. And we felt that the opportunity, looking at the different horizons for us, we're sort of looking at things like, the Men's World Cup, being in the American market in 2026. That's a big driver for us. The growth of the sport of soccer in that market is on a real path. Women's football in that market is a real world leader. So for us, for our business, for the products that we make, we felt that there was a bit of a wave that we could ride in that market. So timing we felt was optimal.
Yeah, no, totally. And Scott, when these companies are landing, what are you looking at from an investor standpoint?
So as an investor, you actually don't differentiate between Australian or American. You just differentiate between what's the best opportunity to invest in. So this gets back to Adrian's point. It is super competitive. No one really cares if you're Australian. They just want the best opportunity. So you've got to be really clear who is your go-to market, who is your client, what are you trying to do? Preferably, you need to have paying customers there already to demonstrate there is demand there. You'll be matched up against an American, and they'll tell you they're the greatest and the best, and they just fake it till they make it. So the humble Aussie there, you really have to put that aside. You've got to be out there. It's all on the front foot. It's sales and marketing. It's being aggressive. And the market's changed now. You know, the conversations with VCs in the last 2-3 weeks, no one is investing in anyone unless they've got a pathway to break even or profitability in the near term. And there's a clear direction how they're going to get there. So it's real financial metrics. Ideas aren't getting funded now like they were 2-3 years ago. That's all gone. So, you know, and to do all this, you can't do it from Melbourne. You have to be on the ground here. If you say you're trying to raise from Melbourne, or you're going to run the company from Melbourne and you're not in America, they won't even give you the time of day. So, you know, it's really, you got to look, smell, you know, breathe like you're an American and you're there. And it's, as Adrian said, you got to be committed to the market you choose to play in.
It's interesting you talk about that kind of the humble Aussie. I was talking to a US VC the other day, and they made mention that, you know, Australians will go over and discount their business as they pitch by around 30 to 40%, whereas an American would be going in probably where you'd be adding another 40% on top of what the actual business really is. And I think that's actually one of the big mindsets. You've really got to go in there quite confident, very brash. This is what we're doing, and because that's just the mentality over there, because they're going to discount it. And if you're already discounting your business a little bit, it's not going to break through.
That's true.
And tell me, let's just have a you know, a quick discussion about the market. Like, I was in Palo Alto and San Francisco and New York last month, and it's interesting you say that about the market. A lot of the, you know, I was there earlier in April. It was a bit quieter. A lot of the lawyers that we work with on Project Frontier were saying that they're expecting it to kick back in September, October. I went back, and they've, you know, they were quite bullish at the start of the year, but they're not as much now. They're still quiet. They're trying to, inverted commas, find something to do. What are you seeing at the moment? And is it, I mean, what do you foresee in the future, in the short term?
Oh, look, it is tough at the moment, and that's a function of a number of things, right? Fundraising's tough all around. A lot of VC, and, you know, people, you've got to understand when you're raising money, if you're going to try and take VC money, a lot of the VCs are struggling to raise money for their own funds. And so they need to raise money from investors to be able to invest in startups. So, you know, that's definitely slowed down. And why is that? A lot of the institutional investors, you know, they're over allocated VC, the other parts of their portfolio smashed, and the easiest trade to do at the moment is park your money at cash and get 5% risk free. So now with interest rates high, valuations across all asset classes have come down. So you're finding that as well. So that's just a function of the market. Capital a bit more scarce. There's more, you know, companies looking for capital too. So that's where it comes to competition. So it's there. But as an investor, this is the best time ever because to invest. And history always shows times like this is when the best companies are.
You're on mute, Scott.
Sorry, Scott, you're on mute.
So history just shows, you know, times like this is the best time to actually invest, and this is when the best companies are made, the ones that are lean and scrappy, and they've got client, you know, product market fit, and they really understand who their clients are and where they fit in their ecosystem, you know. So it's taken a lot of that excess out. It's highly competitive. It's hard, but it's doable. You just got to be really clear.
Yeah, no, absolutely. And just on that, I mean, Sam, you're going through a fundraising process at the moment. What's your experience been?
I mean, sort of, I guess similar to Scott was mentioning, you know, it is tough. I think we all know that. It's not no new news really there. I mean, we're really talking more to family office and sort of individuals versus talking with, you know, venture capital firms. And I think the conversation there is a little bit different for us. You know, we've sort of found, you know, we have a few different lenses. There's obviously a commercial lens to our business. There's also an impact lens to our business. So it sort of spreads the different types of people that we speak to, I guess, across the spectrum. And, you know, I think that, you know, the conversations that we've been having they're taking longer to have, I think, is the general feeling. But I think that they're still quite warm conversations. I think that, I think a good thing to invest in is still a good thing to invest in, and it's there is capital out there. It just is taking longer to kind of have those discussions, and no one's in a great rush to kind of get to it, is the general sort of bottom line from us. But it's still positive, I think, in the main.
Yeah, if you've got a good business, you've got a good business. That's the
Yeah,
fundamentals
correct.
are still there.
Yeah, if there's an opportunity, and for us, it's like we're in the world of sports, we're in the world of particularly football and soccer, and that's on the rise. It's there's a lot of energy and positivity, shall we say, around those types of things that you can use to leverage excitement and interest in the business as well. So like you said before, I think it is about being lean and being scrappy, and that's what running a business is about. You have to get used to really doing this on your hands and knees with a roll of tape, because that's what you've got to do. And and I think adapting to the environments, if you really believe that there's an opportunity there, like going after it at all costs is really the way to do it.
And in terms of going through that raise process, I mean, the US has had arguably hundreds of years of venture capital in their blood, and you can date it back all the way through to Massachusetts and the whaling through there. There's a great book, VC, that you can do a deep dive on that. Australia arguably is still very early in that. So founders need to understand what the differences are. Scott, from your perspective, what are just quickly, what are the key differences? But then secondly, how should Australians be kind of building their pipeline and getting to these VCs? Like it is a different process over there.
It is, and look, it really depends what stage you're at. Are you pre-seed, seed? That's where, like Sam said, you should probably focus more on the family office angel investors. And angel investors are great because most of them are in tech or finance, and they understand it and get it, and they're just backing the idea and they're backing the team and the opportunity. And my experience, an angel in Australia compared to them is chalk and cheese. The angels in Australia are ex-lawyers and bankers who want to see budgets to actuals or numbers that never going to make sense. Whereas over there, they'll just write the check. So, that's at that level. Small VCs that play in that space too. So that's where you should focus. At Series A and B, that's when real metrics. That's when the rubber hits the road. And at those levels, that's when you should be building out the C-suite. The tech's really good. You've got at least $1 million ARR, and that's on the way up. It's compounding every year. You've got a good story, and it's time for expansion. And that's where you're really raising capital, as it says, growth, to build out the team and go hard on sales and marketing infrastructure to support that. And then that's VC, right? So, and with all this, and I saw it as a VC, right? You get so many pitches from people that are not even relevant. They haven't even looked at the website to see what you actually invest in or what your thesis is. And you've got to do your work. You've got to do your work up front. A generic spam email to someone is not going to get an investment. So, unfortunately, you see that a lot. So, you've got to do your work up front and be intentional who you want to partner with, because it's not only the dollars. You want a partner who's, in sync with you to help you grow and open up those opportunities.
Yeah, and I think that is a good point on the making sure you've got the right. Like we've had clients that have gone through Project Frontier that came to us after 6 months, hitting up, Andreessen Horowitz, Sequoia, all the big Kleiner Perkins, all the big groups. But that kind of mid-tier or the family offices are also great opportunities and probably more relevant because the check size, the industry, and also the knowledge. And I think that's the one thing that you see more and more of. How have you kind of sourced your funding, your pipeline, Sam?
I was just about to say, just sort of jumping on the back of what you were just saying there, Anthony. I think it's having a really clear understanding and perspective on who you are, and as a business, as an organization, the size that you're at, the scale that you're at, and like really kind of being able to try and put that in perspective with the market. And because, yeah, you're right, you kind of, you can kind of do this at arm's length, and you can kind of, Google whomever, get recommendations, start, tapping up all of those names that we all know. But, to your point, Scott, like it's half the time it's irrelevant, or it's not the right timing, or you're coming in at from the wrong perspective, or, there's just so many mistakes that kind of happen there that I find that, I think we sort of started in that space a little bit. And, even though we've got a pretty good network there to start off with, and then, being completely transparent, we then, was working with you, Anthony, in the Project Frontier, and we got introduced at a different level, and sort of getting those kind of just a clearer perspective on the market there, and the types of opportunities for raising capital, and how we should maybe be looking at this from just a different angle. And that really made all the difference for us in terms of just wasting our time and wasting other people's time to actually starting to have kind of more valuable and fruitful conversations. So I think that, I think for us, it's really about understanding who you are and where you fit in that space. And then I think you can then start to find your match. It is a little bit like dating at the end of the day,
And further to that point, Sam, like if you do it well and targeted, you will get your 10 minutes. It's one thing Americans are, scared of, and it's FOMO. And we sort of hate it in Australia, but the elevator pitch is real over here. They'll give you 5 minutes. You just got to nail it, and you've got to, top 2-3 points. Why should they be interested in talking to you? Their attention span's not great. So you've got to nail it. And if you don't do that, they'll just move on to the next opportunity, because there's so many choices for investment looking for capital. So, but you will get that, opportunity. So it all comes down to a clear, concise pitch. What's your pitch?
And you've got to have a good product, like that's, and something fundamentally that makes sense over there. And in terms, just on the product, Adrian, like what are you seeing from an expansion perspective that, some Australian companies or founders, mistakes that they make when expanding?
Yeah, in terms of mistakes, it's hard to put something on it directly. I think expectation probably covers it a bit, just in terms of what the company or the founder actually expects when they're looking at the US and expanding in that market. And it's when those expectations aren't met that there's issues. And so from that perspective, I know we've covered a fair bit of what you need to do, but I think as part of it, it's, again, I'll go back to the commitment to the market. If you're committed to the market, you're over in the market. And as Sam pointed out before, you've got to be over there. You've got to understand it yourself. And I'll loosely, to link it back here, in a capital constrained market, be it here and over there, I will say mistakes are made when you try to take shortcuts, and they're not intentional shortcuts that you don't want to do the work. It might be budget constraints, it might be time, whatever it might be. It might be, listen, I'm occupied in another market, and they're all valid reasons. But again, if my aim is I want to succeed in the US, priority number one, what do? You invest fully. You get over there, you spend time over there, you invest money in that, and that might be getting key people around you. So it's when you're not doing all that, it's a mistake. And again, I don't want to commit founders money on their behalf and say that they've got to come up with all this money and take their attention away from anywhere else. That's not what I'm saying at all. But again, when you want to be successful, it's fundamental traits of being successful, and part of that is what in getting successful in a market. When you turn in terms of expanding, it's all in, and with that, and one thing I would like to point out to founders, is a conversation I have all the time, is that you're the owner, you're the founder, it's your business. No one's going to do it better than you. So when it comes to, listen, I'm going to get a distributor, or I'm going to get an agent, do some of the work in form, I'm relying on their input to guide me. Do you? you're committing your life to the purpose of your business, and you're handing that over. So in the early days, when it's really it's you're either going to make it or break it, it's on you. And so that's probably what a message I'd probably want to have people take away, that it's that level of commitment that's required, and without it, and again, it's little things here, there, and everywhere, that and that's why that's the mistake. Again, and not necessarily that it's a mistake that's catastrophic, but that can be the difference between succeeding and not.
And no, that's great insight, Adrian. And I think, that's a bit of the tough love that needs to be really communicated. Like, if you're in, you're in. Scott, what does that look like from an investor's perspective, when you get a company coming in, an international company that is kind of dipping their toe, they're potentially flying in every month or quarter, how or they're operating through that kind of distribution model. And you're right, Adrian, like, life does get in the way. We had a client yesterday, fortunately there's two co-founders. One is going over to New York to actually expand the business. The other one, who would normally go, is staying because his kids are in HSC in Sydney. So that life gets in the way. But how is that perceived, Scott? And can you kind of can you communicate a position that makes sense for an investor?
Look, it's really tough because in the VC land, Americans don't care. They don't care. You've got to be there, and that means you physically got to be there. You've got to compete as an American. You'd want to have probably some infrastructure and support around you if you can't do that. But as an investor, and this gets back to even like a Series A and B, a lot of the investors require you to flip to an American domicile Delaware C Corp company, right? And that's just because the LPs in 80% of VCs, they have mandates they can only invest in American companies. So, it's all part of the food chain there. So, if you're not there, you're not committed, you won't get any airtime, to be honest. You're either all in, like Adrian said, and it's a major market for you, or you work out a way that you can have infrastructure around you, that you do have a significant business there, and it's got the right support structures there to run as a American business.
Yep. No, and look, that flip discussion, I mean, that was one of the main pain points that founders communicated to us through our interview process for Project Frontier. And I think it's a very interesting discussion, because we've got a number of US VC clients that they haven't even brought it up, but then you've got some others where they're landing in the US and it's just an absolute non-negotiable. And it's a really big decision. I mean, Sam, what was your experience with that flip question? And just so everyone's clear, a flip up is when essentially the Australian subsidiary or the company flips, or the cap table flips into a US company. So you become, very simply, you become a US company overnight, and all your cap table moves over. And there's a few exceptions that you need to get tax advice around it, and you need to get good US counsel. But it does open up opportunities, but it's also, there's a bit of a grey area. And Sam, what was your experience like?
I think, well, our experience was that we hadn't been, in the conversations that we'd had in the early stages, we hadn't been asked to be in a US entity. We're currently, obviously an Australian entity. We have, an LLC over in the US that we, use for our business, but there's no, we're not running our business. It's not centered in that market. And the conversations have been not really focused in that area for us. We took the step probably about 12 months ago, I'd say maybe a little bit longer than 12 months ago, maybe 18 months ago, to be prepared for that, essentially. So, like you say, we got good counsel, we got good advice. We, worked with, lawyers in Silicon Valley. We worked with, lawyers here in Australia with with you, Anthony, and we made sure that we were ready for that question. Essentially, we don't know whether or not it's the right thing to do for us as a business. We're still really kind of on the fence with it, and we sort of want to see how things pan out as we move forward over the next sort of 6 to 12 months. But right now we feel like we're in a position where we can answer the questions, and we have a clean and simple organization to a certain degree that is ready to flip if we want to make it. We've got the right advice. And I think from my perspective is, you feel like sometimes you're kind of being pressured to do things, like you say, like things maybe become an imperative, and people start to tell you that you need to do this or do that. And I think that, to Scott's point, it's your business, you're running it, like you're driving the bus. And I think that you just need to be 100% clear about who you are as an entity and what is the right thing for you at that particular time, and just get good advice, but don't necessarily rush in. I feel like, at the beginning, we felt like maybe there was a little bit of pressure to do that. But now I think with a little bit of sort of just the course of time of being able to sit with it, we felt that we're not in a detrimental position at this point. We're still in a good space.
And I think you just, back to Scott, your initial point, like, do your research on the VCs you're approaching. Like, a lot of those US VCs will have their investment criteria listed. Some of that is we only invest in US companies. And, back to your point, Sam, like, just have an answer, have the structure ready. Once you can execute, you can execute. But I think, but then the reality is also, as Scott was saying, the investment criteria is for a number of those VCs, especially when you get to that Series A and Series B, is to flip.
And just further to that point, it's as those VCs have more institutional investors in them, that's where the requirement comes into it. And that's where it is. Where if it's at seed stage or a lot of the VCs, LPs could be individuals or family offices that don't have that requirement. But as you further expand and you get proper business metrics, that's where that pressure comes.
Just to draw on that, go back to your point, Eth, and it's probably I just want to harp on it a little bit, because no one here is advocating that you need to flip at any stage. But if it's a business decision, even a personal one, where you don't want to flip like that, that's not where you want to see your business go. Go back to, you do your homework. You get people around you that can maybe lead you to those funding partners, VCs or other, that may not require you to flip. And that's where you put your time and energy. So don't take away from this, if I need to raise money in the US, I've got to consider flipping. Not at all. Either it's going to come up in a conversation, depending on who you go to, but if it's not part of where your business wants to go, then do your homework and target the funding that won't require that of you. And that's where you put your effort, rather than wasting time, effort and money chasing what will never either invest in you because you don't want to flip, or you waste all your time and the only money you can attract is when they otherwise want you to flip. So it's an important one to consider.
Yeah, and I agree, and it is, because you don't want to flip for unnecessary reasons. It's a tax nightmare. And I'm not a tax advisor, but we had a meeting this week around this. And the flow of funds, if you didn't need to flip, but you've ended up flipping for no apparent reason, it can be administratively and financially a bit of a nightmare. Guys, that's great. Look, and I know we're kind of talking a bit about, we're talking about mistakes, we're talking about all the red flags and opportunities and everything. But sorry, we're not talking about the opportunity. What are some of the opportunities for Australians to leverage when they get over there? And what we talk about the current market, but there are still industries getting deals done. And from a is there that kind of seed and pre-seed opportunities over there?
Oh, look, I'll just say, Australia's great, capital efficient. The tech is always good, if not better. than over in America. And that comes from the fact in Australia, not allowed to fail. So everyone makes sure everything really works. There's no better test ground. And, you know, Australians get stuff done. A lot of Americans don't. You know, we do what we say, we roll up the sleeves, we get dirty, we make it happen. You know, and these are strong attributes that people love over here. And that's, you know, and if you go with the right attitude and that, and you know, Australia's a great test ground. You've proven it out. So you just go hard, be aggressive over here. And it comes to the fact that leverage all the networks. So, you know, Global Vic, Adrian and his team, Austrade. If you're an industry body, if you're in FinTech Australia, they're all good opportunities. And then Anthony, the program you're running, you know, you leverage that and everyone you can to help get good advisors around you who can help there, and ones who actually have, you know, connections in America or they're on the ground. You know, that's there, but you know, good old fashioned Aussie grit and know-how and get stuff done, it goes a long way.
And I do think that is a really valid, very important point. Just reaching out, leveraging your network, but also, I mean, people would, you know, yes, they'll give you 10 minutes, but they will give you 10 minutes over there.
Yeah, and that's true, right? You know, and even if someone's not a right fit or they're not the right space, you say, well, who do you think could help me or might be of interest to you? And, you know, it's surprising, you know, Americans are actually quite forthcoming with those introductions. Whereas in Australia, we feel like we have to have a relationship for 10 years before we can ask the question, right?
Yeah, the thing I've really noticed over there is that they get to yes pretty quickly, but they'll also tell you a no very quickly as well. So it's quite refreshing. And yeah, I mean, look, I've done a lot of work over there now, and I'm really fortunate to travel there quite often. And I love it. I'm always grabbing stuff out of there. But at the moment, like, what industries, like for you, Adrian, like you've seen a number, and obviously Scott through First Point as well. Like what industries are in vogue in the US from an Australian perspective at the moment? Like, we've got priority sectors at the moment. What's getting cut through over there at the moment?
Look, the big ones at the moment is clean tech, and it's the Reduction Act with anything to do with infrastructure or green energy or that. You know, there's $1 trillion opportunity here in America that the Biden administration. So that's there. Everything's got some AI in it at the moment, so we see it in every pitch deck and all that. But you know, if it's actually real and it creates efficiencies and stuff like that, that's a big tick. But health tech, wellness, food tech, Australia leader, all this sort of stuff, and you know, agri tech. We've always been good at this. We've always been good at innovative solutions to, you know, big markets. That's you know, opportunities that I see that are there. Infrastructure, we're always world leaders in that, right? So you know, and that's a massive opportunity here for America.
Adrian, what are you saying?
Yeah, I would have to say similar to Scott. Like it's come up in recent conversation, just in regard of the clean tech space as being a really sort of hot area at the moment. Like we've actually got a couple of governor-led delegations coming from the US visiting Victoria in the next few weeks here, and you know, the conversations. Yes, they've got ag tech, they've got health as well, but clean tech, it's priority. That's where a lot of governments, be it federal, state, and even lower down in the US, are prioritising. So if I draw a loose link then to capital and investment, it's capitalising on those opportunities. So that's where the funding exists. But you know, very loosely, like there's opportunities across all our sort of priority sectors, like companies that have good product to sell in a market that will buy, essentially. But it's probably those few areas where you're getting active interest, like even some VCs or connected people into that industry that I speak to every other week. You know, they always talk to that. Oh, listen, I spoke to a VC and they're interested in ag tech, in clean tech related sort of stuff. So if you've got any companies that might suit that, it's just a popular conversation at the moment, if nothing else.
Yeah, no, that's great. And look, I'm mindful of time because I do, and I'm happy. I'm hopefully you guys are too. Happy to go a little bit over as well. Just, we will have questions, but I suppose, you know, Sam, this is probably something for you. You've had a, you know, great experience from career-wise, an amazing journey. But for you, like over your recent experiences, what is the one tip? And I'd love to get the one tip from everyone. But what is the one tip for Australians you give them in terms of getting ready to raise over there and expand in the US?
I think it sort of goes back to maybe what I was saying a few times in this call already. I think the mistake that I think we made at the beginning was thinking that even though we'd worked in that market a lot, and my partner is in that market, and making the mistake that we think that we know the market, and making the mistake that we think we know where we fit in the market, essentially. And I think that at that point, we hadn't done the work. We hadn't really done the work to understand who we are in the context of the market. And I think that we thought that we knew who we were sort of, you know, hypothetically, and we thought we knew who we were in the context of Australia or maybe some, you know, other markets, but we'd sort of shorthanded it a little bit at the beginning. And I think that sort of we just didn't get any traction. We weren't having the right conversations, and it was leading us down paths that we just were wasting our time on. So I think for me, the tip is really understand who you are as a business, what you want to get out of this in the context of that market. And I think that you have to go, like as Scott said, go and get as close to it as possible. You know what I mean? And that really just means getting pretty hands-on, I guess.
Scott, what about you? What's the one tip that if you were, you know, from all your years of experience, what would you say?
Oh, look, it's just building on what Sam said. You really have to identify who is your target market, and you've got to be here. You've got to be on the ground. There's no way around it. And even raising capital now, investors are only really deploying in face-to-face meetings. So, you know, the day of Zoom raises are over. You've got to be here. So, you know, and then by being here, you'll understand better who your market is.
And you'll take a coffee with the participants here today, won't you, if they land in Boston, Scott?
Absolutely. I know the one good coffee place. That's not going. So
it doesn't end with bucks, does it?
I'm always up for a good coffee.
No, that's good. That's good. Look, and I think that paying it forward is a huge one in the US of, you know, I think, you know, as I'm sure you have, Scott and Sam and Adrian, like there have been times when someone's given you that opportunity, and that really does resonate in the US around that paying it forward. As long as you know, someone will be there to take that call and assist, but there's also that expectation that you keep doing it within the market. Adrian, just to finish it off.
Yeah. I'll probably, you know, said most of what I have to say on that point, like what is the one tip, but I'll go back to it. And one before I go on to Sam, I like your pointing just to, you know, misunderstanding the market in some respects. One thing I do probably overuse, but I like to say it, is, you know, when speaking to companies wanting to go to the US, I say to them, I would prefer that the US spoke Chinese or German. And the reason I say that is if you're going to a country where you don't know the language, you get ready. You do your homework. You go in expecting it's going to be hard, and you've got to get your ducks lined up before you go there. And I think because America is so hard and is so diverse in terms of all the different states being almost all different countries within themselves, because they speak English, you go in with that expectation it's going to be easier for me because they're like Australian. So that's one tip. Go in thinking it's going to be hard and making sure you get yourself ready. You know, you put your armor on knowing that's the case. But the other tip goes back to what I was talking about before, just in terms of that commitment. And I think that the opportunity is big enough, the market is big enough to make it a priority. And as everything was spoken about today, just being committed to the market and everything that comes with being fully committed. I think I can't go beyond that. Otherwise, I'm just picking things apart for the sake of it.
No, but I think you're right. Like you've got to be all in, and you've also, because as much as that may be challenging and also costly, it's also a huge opportunity over there if you can nail it, and it can help. And on that cultural, I mean, you've got to really, there are little intricacies there that you'll forever be learning. I always remember I got pulled up recently because I was saying to someone, "Oh, we'll organise a meet. We'll put a meeting in the diary," and I said, "I'll put you into my diary, and we'll have a meeting." And it was more, make sure you say the calendar, because diary is more like I'm putting my thoughts down as like a journal. 11-year-old. I'm putting you into my diary. So there's just little bits and pieces there. But look, I will open it up to the group. But I do want to thank Scott, Sam, Adrian, for taking the time today. We've all had such great experience, and we're very grateful and fortunate to have you here, passing on that knowledge. It would be good if you can share your details as well, just so if there's anyone that wanted to reach out and ask any questions but I do appreciate it. And Adrian, this is the final webinar that we've done, and it's been great to work with Global Vic. They are an incredible resource for everyone looking to the US. And globally, they've got offices all over the place. They're very commercial and can create some great opportunities. We've got a couple of minutes to go. I just wanted to open it up to anyone that wanted to ask any specific questions. Thanks, Fergal. That's very nice. If there are any questions for any of the panel members, pleasure, Justin. Anything coming through?
Marcus has put his hand up.
Oh, yep, sure. Marcus. Is that Marcus 10?
Marcus, pop on your mic and video if you like, Marcus.
Hey guys, it is, mate. Thank you. Great presentation today, guys. Just a quick question with respect to, I noticed a couple of you in Boston there, but just in terms of physically landing in the States and drumming up finance and with venture, where would you see the physical sort of powerhouses to do that? Is there any sort of, how would you go about prioritising?
Marcus, it depends. It depends what your business is.
Yeah.
If you're fintech or financial services, it's East Coast, it's New York, Boston.
Yep.
If you're consumer or wellness or health, it'd be Silicon Valley.
Or LA. LA's the great
LA,
one.
yep. Yep. So it really, really depends on what your business is. It's such a big, diverse country that, that everyone has their pocket of excellence type thing.
Yeah, that's helpful in itself. So just to recap, you were saying finance, fintech, etc., is on the East Coast, etc., and what were the other industries on the other?
Oh, look, yet again, like there's a lot of VCs in like Denver or Austin. You just really got to pick your point. But financial services definitely East Coast. I mean, 2 years ago, both Andreessen Horowitz and Sequoia for the first time ever opened offices in New York to tap fintech because they weren't getting any deals because they were in Silicon Valley.
Fantastic, great, thanks so much.
And also, like you've got really unique locations. We've got an ag tech client that is raising money from a Nebraska VC. There's it is such a broad market. But I think the one thing is not to bite off too much. The location is a big piece there, and we see clients that say we're going to be based in Silicon Valley and in New York. It's probably more efficient just to choose one. Because they're both very, very different, and I would say doing business in either of them is very different. We've got a couple of questions here, Andrew. VCs and angel investors I deal with say there is a general valuation uplift in the US, i.e., same company will be valued X% more by US investors in Australia. I mean, personally, yes, I totally agree with that. There's a number of reasons why I would say that, but also because they truly have that venture mindset, which is really, they're going to do that. They're going to see a bigger opportunity, and it just goes, there's higher amounts of money there as well. Scott, would you agree?
Yeah, no, totally. It's valuations tend to be a lot better, and fundraising a lot higher compared to Australia.
Guys, Adrian, you answered this a bit but around that fly in, fly out for extended periods, is this a sound strategy?
Really depends. The more time I'll say it this way: the more time you spend, the better. I look at it outside of specifically capital raising, all that conversation about setting up, a business there or whatever. I'm talking specifically about keeping your finger on the pulse, being seen in market, building your networks, and understand what's going on while being there, not just relying on other people's information or Google to keep you abreast of what's happening. So from that end, listen, as much and as often as possible, assuming that you can afford to do so. I'm not talking money there, but from a business perspective.
But you would say that if you're on the ground, yes, it's going to be more costly from a time. You're going to be missing opportunities here. Being on the ground is more a sounder strategy.
Yeah, absolutely.
But you also potentially give up opportunities back in Australia as well. Yeah. The real dollar cost that needs to be set aside to undertake the expansion activity. Should we be prepared to invest to get the capital we seek? I think that's a difficult question because, again, all companies are different, and also, there are some that need higher investment amounts. So I'm not really, to put an exact dollar figure on it is challenging. But I think there's also the opportunity cost as well. If you're going over there as a founder, from Australia to the US, well, you're also not going to be in Australia for that period of time, maintaining opportunities here, and so you might need to hire someone else. So it's a challenging one, unless anyone else has an opinion on it.
I think it's really, the way that we look at it is really dividing it up into percentages, like looking at all of your resources, whether that be, financial, like time, expertise, etc., and just trying to carve out what is the opportunity worth from a percentage perspective. Where am I going to put, I've got 20% of this. Do I allocate it to this or not? Is it worth it? Do I allocate more or less? And I think it really comes down to, to that. For me, it's not necessarily, how much money should I spend? It's more, everybody's different. So I think it's really about just a percentage of your focus or efforts.
And you can be pretty scrappy. You can still get, runs on the board by, flying over and doing meetings and
super scrappy. You don't have to do this 5-star. It's it's very much 1-star.
Don't worry. Yeah. I've been to that half-star place. Don't worry, it's a good one. I've got some good spaces actually. I've got some really good. Yeah, I'm getting there though. But sorry, Scott.
I was just going to say that can be part of your fundraising discussion. Why are you raising at seed or A and B? And it's to expand to America. That's a good enough reason to actually seek capital. And then, hey, I'm going to have a presence here, and I'm bringing this great tech and great team and opportunity to America. That's why, and you'll get first look at it once you invest in me. That's a pretty good story.
Justin's got a great question. I'm interested in whether there is a preference to support something with a likely high percentage of a smaller growth market or a small percentage of a large market.
Read that again, Anth. I didn't quite understand.
Sorry. I'm interested in whether there is a preference to support something with a likely high percentage of a smaller growth market or a small percentage of a large market. So are you taking over a large percentage of, say, California, or are you taking over a small percentage of the whole of the US?
I think, sorry, just to jump in, I know that maybe Adrian, you've got a thought on this, but just from my perspective of being there, like, it goes back to your point around, it's a foreign country. And I learned that like day one when I started working in California, it's like they might speak the same language, but it's definitely a foreign country. And I think that, like that, you also make the mistake of thinking that the US is the US, and I think that there's, we have a very, city by city, almost like neighborhood by neighborhood kind of approach to thinking about how we want to expand our business in the US. It's not a US strategy. It is there's a different strategy for what we want to do in South LA compared to what we want to do in New York, compared to what we might want to do in, Minneapolis or Austin or these other places that, that we're looking at. And you have to build out, in my opinion, you have to build out that and think about the market in that way, because it is completely different. It's like sort of tackling Europe with a blanket. It's like, France is very different to the UK, which is very different to Italy. And, you just have to treat it in that regard. So I think that you can't think of the US as the US, number one, I think, it's sort of, so I think, yes, expanding to a market in the US is really, for me, the way to think about it. So it's like, right, we're going to land, where are we landing? We're going to be landing in, Northern California. And that's where we think that the vast percentage of our customers exist. And that's where we're going to, that's our beachhead, and that's what we're going to build from. And we're going to then, grow from there. I think having a focus like that is really important.
One thing,
sorry, Adrian, you go.
So I was just going to jump in, and Scott, you're frozen on my screen. I don't know if you're still there and frozen on others, but I'll get you in a sec. Okay, I'll get to. I'll ask.
It's a great shot, isn't it?
It is a good shot. Yeah.
It'd be interesting to Justin's question for you to answer based on an investor point of view, but one thing, and it's not a direct answer to your question, Justin, but that whole, big percentage of a small market, and I'll look at it as industry as opposed to locality, or a small percentage of a very large market. Two things, and I don't know how cringeworthy this is going to be for you more so, Scott, but I like watching Shark Tank, right? And two things came up in the recent weeks that I found actually interesting. One was the whole concept of it's a small market or small opportunity, but I'm going to go for the lion's share, and it's in that where there's a few main players and you're competing with them, and it's your product, service, whatever, that is far much better. So it's about communicating why you're better and why you can overtake them, why you can capture that larger share. And it's the conviction in that's going to play a large part. The other one, and this was interesting, where, and I hear this and it sounds good from a lot of companies where they say, the opportunity is this big, and it's always billions, whatever the billions. We're going to just chase 1% of that. And if we chase 1% of all those billions, our company is going to be worth 300 million. That's all great. And it was Mark Cuban actually that responded to this company that was talking about that. He goes, and he throws his head back and he says, I'm sick of those stupid numbers. He goes, I need to know exactly how you're going to get that 1%. That's what I want to hear. That's what I want to see. Not that you can get it and your company's that good. It's I need to see really strictly how you're going to get it. And so I assume, Scott, you can jump in from an investor point of view, how you view that same question.
Yeah, it's you really want a big addressable market, and yeah, you do see it a lot. Like it's 20 billion. This is, we're going to get 1% of this, but what you really want to do is hit the metrics, right? So if you're raising an A round, you want ARR of about 3 million. You're hitting B, you want about 10 million. So the question is, how are you going to get from A to B, and what are you doing to get there? Not this potential number you'll get, but what are you actually doing? And that comes down to your partnerships. Are you putting on clients? quick enough? Have you got the infrastructure to support that? That's that's probably more the discussion. Unfortunately, VC, everyone thinks it's Shark Tank, but it's not quite like that. But there are a few sharks in VC though.
There's a few dolphins as well. That's one of Dick Carroll's jokes. But I think it's important as well to kind of for the ecosystem and founders to understand how VC truly works, like what their outcome is. So, they bet on, there's a high failure rate with venture capital, but they also they're going for that moonshot. They might, you can ask about what the smaller percentages of a bigger market and vice versa. But the Power Law, which is a great book, everyone should read, and is really the fundamentals of venture capital. The basis is that really through all the failures of the businesses within a fund, one company should really take it and return the whole fund altogether. Now, to do that, it has to, you have to really be, going from 0 to 100 very quickly. So it's really important that you kind of, you're going in there with, well, this is the opportunity of our company. If it's not big enough, then maybe venture capital is not the path you go down. You might look at other things like private equity or a family office that just want to invest in a good, solid business that'll have returns.
Anthony, that's the key point, right? And everyone says, why doesn't VC invest? They're not after 10Xs, they're after 100X. And they have to have one or two out of every fund to get that to hit their 3X overall return.
So that's great. Geez, this is great Q&A, guys. I just got to really, is there appetite for food businesses? Absolutely. I'm just making a very blanket statement here. We've got Project Frontier, which is, the program we developed to help Australians land more successfully. And food businesses are a huge proportion of the companies. We've had about 85 companies through the program are food businesses. And there's specific groups over there that are VCs that are investing directly into food. So there's other issues. There's everything from health to scarcity. So it's a huge opportunity over there, from ag tech, to Sweetgreen, I think listed last year or the year before. So yes, there is, absolutely.
And with food, the epicenter of funding is Chicago and then the Midwest. And you'll see, you get a lot of support there.
Pizza pie, hey?
That's not good.
Cool.
Right. Might wind up, Anth, I think. Almost.
Yeah, no worries. It's getting late there, Scott. Look, guys, thanks again. Thanks for going over and thanks for your time. Awesome insights. Really enjoyed that. I hope everyone else did. And please reach out. We'll put Adrian, you'll send through our details. Please reach out to us. We love, we've got that US mindset of, having a coffee, taking time, seeing how we can help. Adrian, is there anything from your end that you want to finish off with?
No, just an official thank you, Anthony, to you for the whole series. Scott, Sam, thanks for today. Really great insights and offering up your time and opportunity for participants to connect with you. And lastly, I'll do a final email, just a wrap up to send you in the coming days. But just to note, we are recording the session as we have the last two. Anyone who registered will get a copy of these recordings. The second one we did just had a bit of a delay getting out to you, but in the coming weeks, you'll all get the recording to watch and listen again. But again, thank you all. Thanks for your time. Hope you got a lot out of it. And for anything you need, we're here to help. So please reach out. And on that note, good afternoon. Enjoy the week.
Thanks, guys. Thanks,
everyone.
Thanks, Adrian. Thanks, Scott. Thanks, everyone.
Thanks. Bye.
Bye.